exact return, but to the downside. And in both cases, when you buy an option, not when you sell an option, when you buy an option, you have unlimited, nearly unlimited upside or downside potential for that trade. And you have defined your risk on entry. So for example, if I pay $1.50 for a put option and the stock runs $10 to the upside, I still can only lose $1.50. And by the way, I would cut my loss at 75 cents because that's my discipline. At 50%, I'm out at a 50% loser. Same trade, I buy a call option for $1.50. The stock runs to the upside and now push that call up to $5 in value. I will take most of that off, meaning that I will put money in my pocket and then leave a little bit out there to continue to run. You have to be disciplined about cutting losses and about letting those profits run. That's what we teach all the time. And that's what we will emphasize, by the way, at Rebelcon 2022. Go to marketrebellion.com/Dallas to learn more. All right, here's that big trade. You think this one's big? SPY happened just minutes ago with the index at 408.12. That's the S&P 500 SPY, the spider for the big full value, which would be trading at 4,081. This one's trading 408.12. All right, 48,395 puts in October. So what does this mean? This means that somebody wants protection or somebody wants to bet that the market goes down between now and October. So it's a couple months into the future. The fact that they bought these calls for an average price of $8, you see the numbers right there on the screen. They started buying them in the $7 range, these calls, $7.28. They bought them all the way up to $9. So I picked a middle price and said, let's say that they paid $8. That's hand signal for 8. This is 3, that's 8. So let's say they paid $8 for these calls. That would be, since every call is for 100 shares of stock, $800 per option. Okay. Multiply that times 48,000 and you get a $38 million bet that somebody put on really fast, that they thought, hey, I need some protection and I need it now because of what Jerome Powell said or what the market might do and what level we might get to, which is approximately 395 for some of our charts. That's why they wanted so many of these calls. So be aware that this is a put purchase, which means somebody's betting on whoop to the downside. If you're a stock trader, you would be shorting this particular ETF. If you're an option trader like us, I can define my risk. I could, for instance, pay $8 and I could sell a lower strike against it and collect, say, $5. Now I have a trade on that I only have $3 at risk, not 8. So that is one of the smart ways I think that you can play this kind of really big, very negative trade. And I wanted you guys to be aware of it. Let's go on to the next, Rebel Edge. This is our show. It's a streaming show about to be picked up by a major streaming company. And we will tell you about that in September. Until then, we are on all the socials and we are on YouTube, where if you go to YouTube and you type in Market Rebellion into the search bar, you can subscribe for free for all 2,900 videos that are up there. And you'll see and could see each and every one of them to see our methodology, how we do what we do, and see how accurate it is. You could also see all of the Rebel's Edge shows that we've put up there because we've been doing those for several months now. The Rebel's Edge goes Monday, Tuesday, Thursday, right now, 3 days a week. It may extend to 5 days a week. We may move the time. But right now it goes at 1 p.m. Eastern time. So if you're looking for unusual activity, Monday, Tuesday, Thursday, 1 p.m. Eastern time. Another trade, this one's interesting as well. It's a bullish trade. How do I know that? Because they're buying calls. That's, again, a leveraged bet to the upside in Chinese internet stocks, because these have been very hot. I talked about it yesterday. They're up about 11%, the internet stocks for China, as followed by KWEB, which is an ETF for them. And 10,000 is a big trade in that. 10,000 of these calls at 32 with the stock of KWEB, or the ETF, exchange traded fund, trading at $30.27. So call it $2 above where the market is. 8% jump. Is it possible? Oh, yeah. Is it probable? Don't know. That's why I'm buying the 30s, and I will sell upside calls against it. We're on the steep part of the decay curve here, folks. The final 4 weeks, 5 weeks of an option's life, the option, of course, each one of those weeks has 2 days when we don't trade, Saturday and Sunday. Sometimes you have a holiday. One of those is coming up with Labor Day. So you get the idea. Even though I say 4 or 5 weeks, we know that there are several of those weeks that will have 2 days, and one of those weeks that'll have 3 days where we will not trade. So that's a lot of time decay for nothing. That's why I will be selling an option against each option that I buy when I establish this trade. I cut my risk, I hit time decay, and I put myself in a better position to profit by doing this. So throwing that one out there, KWEB, Chinese internet stocks. Then I'll say, well, September 21st through 24th, we've got the virtual Rebelcon. We are nearly sold out of the regular tickets. Unfortunately, the ticket prices for virtual went up last night. We've got a lot of demand for these, so prices went up. We warned you. We kept telling you prices are going up on the 25th at midnight. Well, they did. Go there, check it out. We'd still love to have you attend virtually. Virtual Rebelcon. Look at the money you save, though. You're not having to fly there, drive there. You're not having to put yourself up in the hotel or at the Four Seasons with us. Check it out. September 21st through 24th. We have literally thousands of virtual passes available. Go to marketrebellion.com/Dallas to secure your spot. That's marketrebellion.com/Dallas. Final trade, JPMorgan, bearish puts. Woo. Well, maybe after some of the damage that Powell and the Fed are doing by waiting too long and then hitting it repeatedly with big interest rate jumps, maybe they're going to start having to roll some of those back. Or maybe consumers are being hurt by some of these big jumps in interest rates. It's not always good when interest rates go up. Some people say, oh, interest rates going up, that's great for the banks. Not always. If it scares consumers and they start hoarding cash, that ain't good for the banks. They need you to be borrowing. They need the big institutional clients to be borrowing. And if both are scared, they don't borrow as much, if at all. So JP Morgan, $117 stock. They're buying the puts at the 100 strike. That would be through some of the lowest levels for JP Morgan in a long time. They bought 10,000, a million share equivalent, because every option is for 100 shares of stock. So you buy 10,000, you're either protecting or betting a million shares worth. A million shares of $100 stock, $100 million bet. Yeah, I want to be on that side of that bet. So that's where I am. Bang. All right, folks, that's going to do it for me today. Still encouraging you to come join us in person. If you can grab one of these last spots, Four Seasons Resort and Club at Dallas, Las Colinas. 2 days of live trading, Texas experience, which includes armadillo races, barbecues, and so forth. We will have a fabulous time, and you will learn a lot if you attend. We've got Brian Sullivan's going to be there, Tom Lee. We've got Bryn Talkington. All of our team will be there, and a couple surprise guests that will still be announced next week. So get your ticket now if you want to attend in person. Go to marketrebellion.com/Dallas, or as you see on your screen there, you can also type Rebelcon marketrebellion.com. Thank you for joining me, folks. Have a great day.